Hello and welcome. This is Business Incorporated coming to you live from Lagos, Nigeria. I'm Chimeze Obi Iwago. Coming up on the program today, South Africa's finance minister dismisses calls to nationalize the country's banks and mines industries. Vodacom Group Limited Tanzania unit receives regulatory approval to extend the deadline of its share sale for 3 weeks. Plus, the International Monetary Fund set to release its financial stability reports today. Let's get started, and we're beginning with the markets. Looking at the markets in South Africa, it was in the green at intraday after the Statistics Office reported a slowing consumer inflation in March. The slide to 6.1% year-on-year in March from 6.3% in February bolstered the likelihood of the central bank will keep interest rates on hold despite recent shocks to the currency. The market here in Nigeria was also looking green at intraday, up 0.11%. Egypt reversed Tuesday's gain to trade low at intraday, down 0.92%. Kenya closed 1.17% down on Tuesday. In the Middle East, the Dubai Stock Index extended Tuesday's gain to add 0.04% at intraday as Arabtech jumped 8.3% in heavy trade on news that shareholders had approved its 1.5 billion dirham new share issue and its plan to use existing capital to wipe out accumulated losses. Blue chips helped carry Abu Dhabi's index 0.43% higher. First Abu Dhabi Bank, the largest lender in the Emirate, was up 0.5% and Alda Properties rose 1.4%. Qatar's index dropped 0.44% on a broad-based slide, with 9 of the 10 most heavily traded stocks falling and the 10th trading flat. Saudi index was down 0.19%. Most Saudi banks have now reported earnings that were mostly flat or lower, with the exception of the 2 largest lenders, Al Rajihi and National Commercial Bank. Most results have come in ahead of analysts' expectations. And in Europe, investors are digesting the news of snap elections in the UK and fresh earnings reports. The UK lawmakers are preparing to vote on snap election. Let's cross over to Frankfurt Stock Exchange, where my colleague there, Conrad Bussen, is standing by to talk to us. Good afternoon, Conrad. Thank you very much for joining us. Well, today the UK lawmakers, of course, are set to vote a snap election. Remember what Theresa May called for? That was on Tuesday. Now, how's the market where you are standing, and of course the authorities there, following this development in the UK?
I can tell you, Jimmy, people here are looking at events very, very closely and very, very attentively, because definitely this is about whether or not we are going to see a hard Brexit or a soft one, which also means that, of course, this is not only about the United Kingdom and how people and businesses are affected there, but also about other countries of the European Union. Let me give you an example. Frankfurt is one of the cities that hopes to become the seat of the EBA, which is the European Banking Authority, an EU institution, an institution of the European Union, which is currently based in London. It's supposed to move to a country of the European Union due to Brexit. Officially, the decision about where the EBA should move is scheduled, in the diaries of the European Union's heads of state for the end of this month, which is the end of next week. This is when a new EU summit takes place. But of course, yesterday's decision by Theresa May to call for snap elections makes it pretty unlikely that the heads of state will already be able to discuss or at least finally decide where the EBA will be situated. All decisions like this are influenced by yesterday's announcement by Theresa May. And, that's why also uncertainty has been sort of rising on the markets. Look at the German DAX right behind me. It doesn't really look like it's finding a clear direction today.
Well, Conrad, quite a number of issues for the market to chew on this day. Now let's look at the Eurozone March inflation that was out today. What does the numbers say about Europe's biggest economies, such as Germany and France? And is that affecting or impacting investors' decisions on this day?
Well, definitely the short flirtation of the Eurozone with 2% consumer price inflation, as we've seen in February, is over. In March, consumer prices increased at an annual rate of 1.5%. Mostly this increase has to do with a continuous increase of energy prices, and also food was, generally speaking, more expensive than in the month of March of 2016. This also means that all the other goods and services that economists and statistics people take into consideration when they calculate and evaluate inflation have not increased in prices, and that is a signal that the overall economic activity in the Eurozone is still not strong enough to really allow businesses to demand generally higher prices from customers. We've been having a continuous strength of the economy here in Germany. France has been doing somewhat better, but still wage increases in France and also the overall activity of the economy there did not allow for prices to increase. And for the whole Eurozone, this means that it's very unlikely that, monetary policy makers will start to cut back the very generous monetary policy anytime soon.
Now, Conrad, tell me, is the market interested in the ongoing World Bank IMF spring meeting going on now in Washington, D.C., especially as IMF is actually prepared to report its financial stability?
I can tell you, Jimmy, people on the financial markets all over the world will be watching very, very closely and listening closely to what will be said in Washington. And it looks like the International Monetary Fund, ahead of this meeting, really wants to influence what topics